Today's guest is a famed geologist, an economic geologist that has been behind many of the large gold discoveries that we've seen today. And we're going to be talking about the macro thesis behind gold, and we're going to be talking about some of his favorite gold mining stocks. Our guest today is Dr. Quinton Hennigh. He is one of the most renowned gold geologists that's out there in the world today. So if you enjoyed today's video, make sure you hit the like button on it. Give us a comment right there down below. This is Gold, Gold, Go, Gold, Go. And it's good to see you.
Good to see you.
All right. So you've been studying gold for a while, and you're also a major investor behind the macro thesis as well. Give me an idea of what you're seeing right now in the overall global economic market and how this fits into gold.
Well, look, we are in an inflationary regime. It is a bit different than previous ones. You know, a lot of people draw analogies between now and the 1970s, for example. You know, history rhymes, I think is the best way to put it. There is similarity, but there's also some stark differences. We have a lot more debt today, you know, at all levels, really, you know, national debt or, you know, global debt even, you know, you can count it, but also, you know, corporate debt, personal debt, et cetera, et cetera. So basically the world is swimming in debt. And that wasn't necessarily the case in the 1970s. So there's one stark difference. And then the other stark difference is the dollar has diminished in its prowess, you know, in around the world here, especially recently. And I think that's a profound difference. You know, when, you know, you look back at the 1970s when Nixon closed the gold window, effectively shutting off other countries' ability to take possession of gold. Guess what it did? It strengthened the dollar. I mean, that was it. You know, it took a while, but over the long haul, by the mid 1980s, you can see the dollar was, you know, a very strong currency. But let's talk about this for what it is right now. I mean, this is an inflationary environment that I think is more closely aligned with the ultimate demise, or we'll say ending chapter of fiat currency, the dollar in particular. But I think a lot of currency, I don't care what nation or, you know, currency you're talking about, we're all kind of headed down the same primrose path here. Now, you know, a lot of people say, well, what does it mean for gold? Well, gold, you know, every day an ounce of gold sits in, you know, in a vault or whatever, in somebody's safe deposit box or whatever. It doesn't change in weight. It's still an ounce of gold. Okay, gold is basically, you know, how would I put it? Like the governor on an engine. It's the thing that regulates, you know, value. And I think we'll see an increasing acceptance of gold to reestablish that role it has in the fiscal system going forward. Gold, if it goes to $5,000 an ounce, yay, you know, okay, we're all rich. Well, no, hold on a minute. That means dollars aren't worth all that much. So you gotta put it pragmatically. But, you know, if you really want to protect yourself, gold's a place to do it. Okay. Because in gold miners, that's where you see the upside.
So between 1970 and now, a lot of my guests have mentioned that, but you made some great points of how in a lot of ways it's hard to even compare it because of the environment we find ourselves in. How do you think the end game of now unfolds versus the 70s when they jacked up rates? What do you think the end game is in today's environment?
There's some big difference. I mean, they were able to jack up rates and control things back in the 70s, largely because the U.S. was the major superpower on earth. You could say, well, there was the Soviet Union. Hold on a minute. Now, the Soviet Union was actually in decline, and it accelerated over the course of the 1980s. Obviously, it fell apart. So really, the U.S. was, you know, and the U.S. dollar was a place to be. Okay, this is different this time. Now, you know, through tremendous amount of overspending at all levels, we're grossly in debt, and what is this debt? Well, it takes the form of these things called Treasury Bonds. And, who's buying them? Well, it used to be, for a few decades there, we saw pretty consistent buying by foreign governments. Do you think that's going to be the case going forward? I don't know. I don't think so. So who's been buying them more recently? Well, okay, the Fed. Yeah, the Fed and U.S. banks. Okay, but the Feds just said, well, we're not going to buy so many bonds. In fact, we might even liquidate bonds that we hold right now. Whoa, wait a minute. So you're telling me that there is no buyer for a bond? Why do you think yields have just broken out? Long-term yields, especially. Look at like the 30-year yield. Boink, it's broken out of a resistance. This is like a 4-decade-long resistance. It's now broken out. To me, it's telling us our future. Okay, and the future is we've got to make some very profound changes. Okay, everybody on this planet, I don't care if you're American or foreign or whatever, everybody on this planet is going to go through an absolutely profound period in time in history over the next few years. What the ultimate outcome is, don't know yet. There's a lot of people jockeying for power and position and political, sway and stuff. But I would say that at the end of the day, you own gold, you're going to be protected. Okay, that is the best protection. Somebody emailed me the other day and they said, "Oh, my power went off," and this person happened to be somebody who likes to dabble in Bitcoin. I said, "Well, can you use your Bitcoin?" and of course that was met with silence. Okay, but I mean that just shows you, like, Bitcoin has its weakness, and this weakness is the internet working and there is electricity available. Whereas gold, it's a little more safe. You can put it away.
So let's talk a little bit about mining stocks. We understand from a physical standpoint of gold, the importance of it as an individual. You've got some of your capital and your wealth outside of the system. We understand it from a macro global financial system. Hopefully that in some form it returns to provide a little bit more constraint and stability to these seemingly global fiat currencies that seem like they're basically evaporating in thin air. It's pretty wild to watch. But let's talk about mining stocks. I personally view my mining stocks as kind of, in an ideal way, across the board in commodities, my wealth multiplier. So let's talk a little bit about the environment for mining stocks, how you think it fits up to past cycles in commodities and gold mining stocks specifically. What's your thoughts right now?
Yeah, look, if gold is your insurance policy, which it really is. I mean, physical gold is an insurance policy because it protects wealth. Then the mining stocks, the gold mining stocks or precious metal mining stocks, they are basically your call option on the future. Okay, they provide you with the upside because the companies that are producing gold are going to be the biggest beneficiaries of an inflated gold prices as this kind of unwinds. Okay, so you can look at your producers, Newmonts and Barricks and Agnicos and so forth. Yeah, do you think they've also broken out, by the way. You can see recent trends in all those stocks. They have broken out. You think they're going to be worth less in a rising gold price? No, I think they're going to go up, and I think they're going to go up correspondingly quite a bit more than the price of gold. Well, junior miners, what are we talking about here? Well, look, we're in an interesting time. There has been a gross undercapitalization in the junior space and the exploration space for many, many years. We've been in a down cycle for a long time, and the money has not been spent to find the next generation of gold deposits. Therefore, the junior mining companies are where you can see the real strong multiples develop. Companies that are making discovery, especially discoveries that are going to be attractive to mining companies to acquire. Mining companies, they're running through their reserves very quickly. Okay, you look at reserve statements for any major mining company, I would say most of them today are weaker than they were 10 or 15 years ago. There's smaller reserve base, lower quality reserve base, in terms of grade and so forth. Okay, these guys need to start they got to put their skates on and start finding new opportunities in terms of new mines. And the junior space is where you're going to see that. So there's going to be huge premiums paid for junior mining companies with good assets.
Now, that conversation around these reserves is one I've heard a lot from guests over a long period of time, but it really started to stick out to me when I heard David Garofalo talk about it. Someone who's obviously from an executive level, one of the most in the know and successful ones out there. Now you've got yourself, a famed geologist. You worked with all these companies and you've been saying the same thing. And that's when it really started to open my eyes. And one of those companies that kind of fits that space of trying to solve that market need, that market solution that you've invested heavily in to the tunes of millions of dollars is Blue Lagoon Resource. It's a company I've covered actually on this channel for a very long time, dating all the way back to early 2020. What about Blue Lagoon catches your eye, and why is that a company? You've spoken really highly of them. I mean, I was reading one of your quotes saying that you think it could be one of the premier deposits and producers.
Yeah, look, it goes right back to the point I made at the very end of my long rant about quality. Okay, the mining industry needs higher quality, which usually translates to higher grade deposits, and they need it now. Safe jurisdictions is another big aspect. Like mining companies want to be in places in which you can build mines, you protect, you're going to create value. Well, Blue Lagoon happens to be in British Columbia, great place to operate. They have a very unusual deposit for the region. It's not typical of the region. In fact, it's of a deposit type that's fairly limited around the planet. It's a subset of an alkaline gold system. And these particular gold deposit types, they can produce very high-grade veins. Examples around the world would be the Buritica deposit in Colombia, Porgera in New Guinea. There's Kellyan in Indonesia. There's Cowell in Australia. There's a long list of these things, but it's not all that long. Okay, it's like on the order of maybe 24 around the world. But boy, when you find one of these things, they can really deliver. They tend to be deep rooted, so the vein systems tend to go down vertically into the ground for a long way. They tend to have sheeted vein systems, so you get not just one vein, but you get many veins that are parallel to one another oftentimes. And that means you can develop a lot of ounces per vertical meter. And they tend to be high grade. Okay. Oftentimes these things can be, in an underground mine setting, 10 plus gram type, per ton type deposits, which means higher margins. Okay. So Blue Lagoon, when we identified it, when I first met the company and talked about this, they were looking to develop their small scale mining operation, which in its own right is a legitimate business case. But I looked at it from the exploration standpoint. And after talking to their geologist, Bill Cronk, I said, you really do have a prize here. You got a gem here that needs to be tested. And late last year, more or less following the script that we discussed, he started drilling in the Chance zone, which is a structural zone, which is a zone that's not immediately within the existing resource at Dome Mountain. This is the area to the south of that, between the big vein and the free gold area. And they found a whole new set of veins. I mean, literally just sheeted veins. Like in these drill holes that have come back so far, you can see multiple high-grade veins in any given hole. In fact, they had one, I think, in January that was a little over 7 meters of nearly half an ounce gold per ton. That's remarkable. Brand new discovery, wonderful outcome, but it's just the beginning.
Now, so when you're looking at junior miners, since we're on the subject of Blue Lagoon, we'll use that. So is there kind of two main scores given this kind of macro environment where these big companies are depleting their reserves? It's one, you said, a legitimate business case. They've been talking about moving production up. They're coming into production soon. So one fold for a junior is, do they have a path to production? And two is, how great is the exploration side to become a major deposit that is attractive to these larger companies? Is it both of those that you're looking at in juniors?
Look, I usually focus on the exploration side. I like to invest in companies that have district scale land plays, but also the geology that suggests they're onto something that could be world class, preferably high margin, that the majors are going to want. So my focus for Blue Lagoon is just that. It's the exploration side. Now they can proceed to develop the small scale mine. Maybe they get decent cash flow out of it. That's a great outcome. But in the long run, what I want to see the company do, and they are doing, is drilling aggressively here. Because if they find, look, there's two ways to make money in mining. You make money by discovery and selling your asset, or you make money by actually mining. Okay, mining is great, but it delivers returns over a long time. It's not something that necessarily it's year after year production. Okay. Whereas exploration, in 2 years' time, if you drill something and you demonstrate to the world, to the majors and people who want to buy you, that you are onto something extra special, you can deliver huge premium for your shareholders and ultimately sell your asset, sell your product. Okay, and that's what Blue Lagoon is doing. I'm really looking forward to the day that somebody walks up and says, "Wow, this thing is going to be a 5+ million ounce gold deposit, very high grade. We would like to pay an exorbitant premium. Here's a check."
So when you're looking at a junior that came up, you talked out of the Dome Mountain area, you're saying an exorbitant premium because there's such a need in this market today, because reserves have been so depleted. Whether it's Blue Lagoon, whether it's another junior, they have a tremendous upside potential because this market has been so depleted.
That's correct. But it's not like there's infinite opportunity here. Okay, there's a very limited pool of super high quality assets around this planet. It's the way Mother Nature operated. Didn't make a million of these things, made a few hundred, maybe a few thousand deposits around the planet that are of interest to people. Okay, Blue Lagoon happens to have one of those. And in this day and age, it's scarce to find high quality, high grade assets like this. So, you know what? This will be a highly desired asset, I believe. I'm very confident. As long as the exploration continues to be successful like it has been, I think you will see this asset sold within the next 2 or 3 years for a very, very high premium.
So that's Blue Lagoon that we've been talking about. Let me ask you, when you look at the gold price moving outwards, of course, we know that as this irresponsible global monetary policy continues, there's a safe haven in gold. But how much do you think the supply and demand fundamentals of these shrinking reserves will ultimately affect the price of gold moving forward, if any?
Look, when I think about gold, I look at human history and the production of gold. This is very interesting. Okay, if you look back to, say, the Roman period, around the time of Jesus, there was about maybe 150 million people, if memory serves, within the Roman Empire. This would be the Greater Roman Empire. And there was roughly estimates of about 100 million ounces of gold. So that's about 0.66 ounce per human back then. If you fast forward to the early 1900s, there was a bit over 1 billion people on Earth, and there was something on the order of 600 or 700 million ounces of gold. Now, this is about the time the Witwatersrand was found and other major deposits. But you saw that same ratio, about 0.6, 0.7 ounces per person. Today, we have about 7.4 billion people, if I understand things correctly. Maybe it's a bit more than that now. But we have somewhere around, I think the last I heard, around 5.6 to 6 billion ounces of gold. Okay, it's a little bit higher. We actually have about 0.7-ish ounces, 0.75 maybe, ounces per person on this planet. Okay, now, will this trend continue? I'm not so sure about that, because at this point, we are getting to a place where people have basically reached their limits. Okay, if you look back to, say, the Roman period, around the time of Jesus, there was about maybe 150 million people, if memory serves, within the Roman Empire. And there was something on the order of 600 or 700 million ounces of gold. Now, this is about the time the Witwatersrand was found and other major deposits. But you saw, again, saw that same ratio, about 0.6, 0.7 ounces per person. Today, we have about 7.4 billion people, if I understand things correctly. Maybe it's a bit more than that now. But we have somewhere around, I think the last I heard, around 5.6 to 6 billion ounces of gold. scoured much of the earth. Okay, finding high quality deposits is not a common occurrence. If you look at discovery rates of say 2 million ounce deposits within the mining industry over the past decade or so, you can see that it's fallen dramatically. Now, part of that's undercapitalization, meaning that there hasn't been enough money spent, but a lot of that is a product of the fact that it's getting harder to find these big deposits. Okay, so I think if you came back here in in 100 years, and let's say the population is 11 billion or something, I'm not so sure we're going to be able to add all that gold that we need. We might be moving backwards. We might be at a tipping point. Now, I don't know. That's my view on things. It's just plain more difficult to find high quality assets.
Now, you've said before that we don't want $5,000 gold. Can you explain that?
The fact that gold would be $5,000 an ounce, basically, you flip it around. That means the dollar is worth much, much, much less than it is today. The buying power of the dollar. Well, we're heading there. I'm not saying there's much that we can do to avoid it at this point. It's rather heartbreaking to see, quite frankly, and a lot of people will suffer. But that's our problem, is that the fiat currency system, as it breaks down, look at everybody. Look at your common Joe who live paycheck to paycheck. This is absolutely going to be unbearable. It's going to be very difficult to make choices around, what do you buy? Food, gasoline, heat your home, mortgage, as prices go up. And so when I say you don't want $5,000 gold, what I mean is it's going to be very, very devastating for many people as the dollar falls apart or fiat system falls apart. And we have, unfortunately, a lot of social strife as a product of that.
All right, let's wrap up with this. On this channel, of course, we talk a lot about mining stocks, and we did. You talked about why, you've taken such a big position in Blue Lagoon Resources, and in general, why you think the right junior miners are attractive. And I think that that's certainly one tool in the tool belt to prepare for these times. And you've said these are going to be trying, difficult times. We're near the end of a fiat currency regime. Let's talk. What are some other ways that you think an individual is best suited in ways to prepare themselves for this time, whether that be financial, investing, mentally? What do you think is a short playbook for these times? Let's say over the next 5 to 10 years.
I wish I could remember who to ascribe this quote to, but there was somebody in the recent past that made a quote, something to the effect, we want to own things that hurt when you drop them on your foot. Okay. You want to own assets. Okay. A lot of people on this planet are kind of taught how to, put, squirrel away money in their IRA. And so, money's deducted every month, goes into this magical system that automatically, some computer somewhere buys some index fund or whatever with that money. Okay, here's my advice for people. Okay, you use your brain. You got to give your brain. Use it. Okay, gold is an insurance policy. All right, you want to protect yourself from this phenomena that I talked about. This fiat collapse. Buy some gold. I'm not saying you have to take every penny you have, but buy gold. When you buy an insurance policy, on your house, you might pay a small premium every month. So instead, think of your finance system the same way. Buy a bit of gold every month as an insurance policy. Okay, so there's one thing. If you want to take a chance, and look, investing is chancy, it's risky. But this is where the returns are. Invest in mining companies. Okay, it is a way of investing in assets without actually, having to hold the assets. But boy, the companies that do hold those assets are going to be worth a lot of money. In other words, they're going to outpace the loss of value elsewhere. Okay. The other thing look around your life. What can you pull in terms of assets? Own land, own stuff. Okay. Because at the end of the day, that's going to be what is worth something. It's going to be what holds its value is stuff. All right. So any exposure you can get to assets, stuff that hurts when you drop it on your foot, do it now.
Final question. You've been around a lot of successful companies over the years. And of course, you're a geologist. So you're looking at what's the best deposits, what's the best grades, and that's where your focus is. But when you're looking at the companies that have succeeded, what do you like about management the most? If we take an example just from some of your most recent investments, we'll say with Blue Lagoon Resources, how does this tie into other management that you like? What do you think makes companies so successful from the management level? And what do you think investors should be looking for?
Like for any junior company, you have the corporate side, but you also have the technical side. So we here at Crescat, we actually rate and rank the corporate management, how they approach things, how they market the company, their knowledge of the mining industry, how they're, are they capable of ultimately delivering this product to sale to a major, like, can they do that? So that's one way we look at things. And then there's the technical side. I like to see a really, really good technical team in place. These are got to be people that execute in the field. They go out and they do the work that we've invested money for them to do. Okay, so you got to have both, and that's like the key ingredient in my view. You can have. There's a lot of junior companies. But this is going to sound crazy, but there's a lot of junior companies I know that actually have really good assets, but they don't have capable management or a technical team or both, and therefore they don't go anywhere. Okay, then what's the problem? Well, they don't have the right people. We invest in companies that have the right people.
Beautiful. So I want to thank you for your time today. I'm going to go ahead and we will link the Crescat Capital website right there down below. We'll link the Blue Lagoon website right there down below, which you and Crescat have invested millions of dollars into recently. Is there anything else we missed?
Hold on tight. The next 5 to 10 years is going to be pretty exciting.
All right. We want to thank you very much for your time today. We want to thank you for listening. If you are listening today, make sure you hit the like button on this video. Give us a comment down below that says Go Gold Go. Be sure to check out the Crescat Capital website and the Blue Lagoon website, which we will link in the description right there down below. And we want to thank you for your time today.